Hi, my name is Jeff Hales, and I'm chair of the Standards Board at SASB. It's wonderful to be here today to talk to you about working together toward a comprehensive corporate reporting system. But before I do, I think it's important to acknowledge that we live in unprecedented times. 2020 has been an unusual year and has really provided a salient example of the importance of addressing the sorts of things that are captured in the Sustainability Development Goals. And really, we know that it's impossible for us to achieve the SDGs if we don't involve the private sector, if businesses aren't involved. So it's a really salient example of how important it is to understand the sustainability of business activities. But if we think about the information for sustainability, for assessing the sustainability of businesses, it hasn't always been where we need it to be, and it doesn't yet, in my opinion, isn't where we need it to be yet. And that is in some ways maybe reasonable because we've had 100 years to develop our understanding of generally accepted accounting principles, a very mature system to capture what companies have, what they owe, and how that changes from year to year. But understanding more about a business's sustainability is something that has emerged in more recent times. And so there is this gap beyond gap that has been recognized, and has been recognized actually for quite a few years now, but it's still relatively young. So we've seen over the course of a couple of decades the emergence of a number of frameworks and standard setters trying to help to address the needs for better information around the sustainability of business activities. But that has led to, in many people's understanding, a confusing, crowded, complex landscape. And while there's a lot of truth to that, there's also a lot of misunderstanding. And so one of the things that we have done is we've gathered together 5 of the largest, most significant organizations in the space of sustainability reporting, and have joined together to issue a statement on how we need to work together toward a comprehensive corporate reporting system. So that's what I'd like to talk to you about today. And in that paper, there are really a few key messages. One is that these 5 institutions, CDP, CDSB, GRI, the Integrated Reporting Council, and SASB, are trying to work together to resolve some of this market confusion. In addition, we want to provide guidance on how our frameworks and standards can actually be applied in a way that is compatible, that is additive, that is not intended to be, nor need to be somehow in competition with each other, and also demonstrate an ongoing commitment to working together toward this comprehensive and coherent corporate reporting system. One of the reasons that this is confusing is that over time, there have been different uses of the word material and a concept of materiality. But I think what's really important is to realize that the notion of materiality is not really about what is or is not important, but rather what is important to whom. And that's really kind of a key distinction. So we could think about, for example, a wide concept of materiality that's trying to capture any of the significant impacts that a company can have on the economy, on the environment, and on people, whether inside the corporation or outside of it. So that would be quite a wide, broad concept of materiality that would be trying to address a wide variety of needs, different users and different uses of that type of information. We could then think of a narrower concept of materiality that is focused on a subset of sustainability topics that would actually be material for enterprise value creation. Thinking about what are the implications for a company's activities related to environmental resources, human capital, social capital, and how does that relate to the risks and opportunities of that business in whatever type of industry it's in, and how does that affect the company's ability to generate enterprise value going forward. And then still a narrower concept of materiality could be focused really just on that sort of a set of information where it already is captured in the company's financial accounts, thinking about not not as much as not trying to capture all of the risks and opportunities of tomorrow, but actually focusing more narrowly on, well, which ones have already been secured? What are the implications for a company's existing assets? What are the liabilities a company already needs to recognize according to definitions that have been developed around assets, liabilities, and income related to those assets and liabilities. So a narrower set of concepts around materiality. Taken together, the way we see it, and we articulate in the paper, is that these 5 organizations, in conjunction with the IASB and the FASB, have really a nested relationship and sit as part of a nested hierarchy, as opposed to as trying to capture different things. So really the nested materiality concepts recognize different use cases for different types of decisions that would be made. And there's a connectivity to it as well, recognizing that there's a dynamic nature of materiality as well, that the information that relates to a company's activities that impact the economy or environment or people will also, of course, affect its ability to generate enterprise value. And the enterprise value engaging in enterprise, the ability to generate enterprise value is going to ultimately translate into what we see in the financial statements. It's got to make its way onto the balance sheet through a profit loss statement as well. So a really connected set of activities, not really about distinct issues, but rather thinking about who needs what information and when do they need it in order to make the types of decisions that they're trying to make. So if you take that content and think about the corporate reporting system that we currently have, it's really less disparate and random than it might seem at first glance. In fact, that the positioning of these different organizations really might be more thoughtful, even if not explicitly coordinated historically, really reflecting the fact that these organizations have different missions that have evolved to try to capture different purposes. And what we see and articulate in the paper is a potential end state where we are the building blocks for a global corporate reporting system, recognizing that there won't necessarily be one standard setter that can try to do everything, but that the existing standards and frameworks that are out there can work well to serve multiple purposes. Traditionally, we have sustainability reporting that can be communicated through a number of different channels. And we also have information that could be primarily focused on the need for making economic decisions, and that information for different purposes needs to be communicated in a way that suits those purposes. And that some information needs to be presented next to other types of information. For example, in an integrated report, the concept there is that you don't focus only on things that can be reported in currency, that are currently in financial statements. When trying to make economic decisions about a company, you also want to know about the risks and opportunities of tomorrow, and that, of course, also involves sustainability factors as well. So there is, of course, still work to be done. I would think of it this way: we have a very mature system around financial reporting, and so GAAP is quite clear and on how it gets communicated. Sustainability disclosure standards are less mature than GAAP standards, and so but they remain core to our vision. We need more work there, and one thing we recognize is that a globally agreed upon set of sustainability topics and disclosure requirements in the realm of sustainability disclosure standards would make it easier for companies to gather information, use it for multiple purposes to the extent that that's possible. These standards need to be developed using multi-stakeholder consultation, and we need an ongoing commitment to work together as these organizations. There's evidence of that. We have worked at SASB with CDSB to show how our standards and frameworks can be used to implement the guidelines from within the TCFD framework. We also put together a good practices handbook with them. GRI has worked with the IIRC and their corporate leadership group, and GRI and SASB have recently announced a collaborative work plan to show how we can work together and our standards can be complementary. It's not just about disclosure. Disclosure alone isn't enough. If we disclose, but it can't, if no one hears it, if no one reads it, if it isn't easily accessible, it won't be impactful, and that is the ultimate goal. So we need information to be widely available, easily accessible, usable for multiple purposes, and so that requires it being incorporated into the infrastructure that the markets use. We've got in the US, for example, platforms like Edgar, where the information on financial statements is housed. CDP has a long history of being a platform where sustainability disclosures can be housed. And so we're seeing additional work there. CDP is continuing to work to host more sustainability information on their platform. And SASB is working recently with, announced that we're working with PwC to develop a SASB XBRL technology. So why now? Well, partly because there's been a groundswell of demand for improved corporate reporting. We need to know more about the contributions of businesses to help us achieve the SDGs. There's more demand for more information around how sustainability topics link to financial risk and opportunity. We've seen major calls for that this year from BlackRock and State Street and many others. And there's increasingly vocal support from companies to be involved with this. There was the US Business Roundtable statement about corporate purpose last year, and the World Economic Forum, IBC's Common Metrics paper, which, important to point out, is a great example for increased support around the disclosures of this information, trying to move things forward. Less, not so much a new initiative, but rather a way to amplify existing work. And there's a growing appetite from regulators, policymakers, and the accounting profession to be involved. We've seen calls from the International Monetary Fund, we've seen Accountancy Europe, IFAC, IFRAG in the EU, and then also IFRS Foundation making a number of, taking a number of steps to move forward. So the trade winds are blowing and they are strong. In particular, I would point to the consultation paper that the IFRS Foundation put out last week, and it is talking about whether it should become involved in trying to create a standards board that would be focused on sustainability. If so, what would be its mission? What would be its focus of materiality? How would it relate to the existing frameworks and standards that are already out there? In addition, we have just this last week also saw the 5 CEOs of these organizations, the sustainability and the IR framework organizations, put out an open letter to IOSCO, essentially calling for them to be involved since they play such a major role in regulating the capital markets. So what do we need from you? I want to issue a call to action for you to help support and be engaged in this. Take a look at what's in the paper and give us feedback on the ideas expressed there. And then engage with all parts of the reporting ecosystem to increase buy-in and call for change, because this is a pivotal time to do that. Be active, get involved, help us to try to achieve this vision that we've laid out. We think it's the right vision, and we think the time is now, and we need to hear from the investor community on that. It's important that you speak to the companies that you are invested in, to the regulators that oversee them. Let them know what you want. Be not only vocal, but be clear, as that has the biggest impact for in sort of helping them to then lead the way. So be specific in what it is that you need as an investor. And with that, thank you very much for your time today.